Historically, the second quarter, it has always been considered one of the most lucrative periods of the year for commodity traders. Traders are pumping more money into commodities right now at one of the fastest paces seen in over a decade. This is to capitalize on the biggest macro themes driving the markets right now. This is everything from the disruptive impact of climate change to persistent geopolitical tensions to the global transition towards green energy, which is supercharging demand for the world's highly essential commodities such as aluminium, copper, cobalt, nickel, lithium, palladium, platinum, uranium, zinc, and rare earth metals. Now, last but definitely not least is the stickier than expected inflation, which has seen Google searches for the term stagflation surge over 600% in the last month. The magnitude of bullish tailwinds, it is whipping up an explosive money-making storm. This is presenting savvy traders with back-to-back money-making opportunities. For commodity traders, making money in these markets has never been so straightforward. That's exactly why a long list of the world's most powerful Wall Street banks, from Goldman Sachs to JP Morgan to Bank of America, they have called the current economic climate the golden age of trading. So it's no surprise that gold is everyone's favorite trade, with terms like stagflation beginning to creep into the headlines. As gold continues the unstoppable upward momentum, breaking out to new all-time record highs, analysts at Wall Street, they're calling this the beginning of a new era for the precious metal. So far this year, an ever-growing cocktail of bullish macro tailwinds that has driven gold prices to all-time record highs above 2,400 US dollars per ounce. Data released this week, it showed that global demand for gold, it's never been stronger. In the first quarter of 2024, central banks, they bought 290 tons of gold. That is the strongest start to a year on record. Now, more impressively, gold demand over the last 7 quarters, it has exceeded 40 million ounces on average, and that's almost 2 million ounces higher than the quarter average for Q1 of 2010 to Q2 of 2022. Among central banks, the People's Bank of China, they have firmly taken the top spot as the biggest buyer of gold, adding 60,000 ounces of gold to its reserves in April. That now marks the 18th straight month that the People's Bank of China, they have added to gold holdings, its longest ever gold buying spree, as it looks to diversify its reserves away from the dollar and hedge against currency depreciation. Elsewhere, rising concerns over government debt is yet another reason igniting a rush for safe haven metals. In a recent survey of over 250 financial institutions, that survey found that growing concerns over ballooning global debt and uncontrollable government borrowing, which currently sits around 307.4 trillion, that is emerging as the primary catalyst fueling central banks around the world to build up their gold reserves at a record pace to diversify away from the US dollar. A similar trend is also emerging in the retail market. The wholesale retailer Costco, they have been selling gold bars since September, and they're selling out within minutes. The retail giant is also recently adding silver to its precious metals inventory. And guess what? Both are flying off the shelves faster than the store can replenish stocks. All of this tells us one thing. Demand for gold, it shows no sign of slowing down anytime soon, which ultimately suggests that prices are only heading in one direction from here, and that is higher. As the world faces the real possibility of a second wave of inflation, the biggest question now is how will the Fed respond? The answer to that question may come from the latest dose of critical data on US inflation over the next 3 days, as the New York Federal Reserve, they published their monthly survey of consumer inflation expectations, followed by the hotly awaited producer price and consumer price inflation figures. Additionally, Federal Reserve Chair Jerome Powell, he's due to deliver a speech this week alongside a host of other Fed officials, which is guaranteed to move markets significantly. Fed officials, they've said repeatedly that they need to see clear evidence that inflation is under control before the central bank will cut its benchmark interest rate. If that happens, the first rate cut, that could come in September. Even with the presidential election looming in November, 2 rate cuts could still happen this year. It goes without saying that the current macroeconomic backdrop, for commodities in 2024, it is looking more bullish than ever. Citadel, which is one of the world's largest commodity trading firms, they have reportedly made more than $4 billion from commodities, and we're only a quarter of the way through the year. In fact, with everything that is currently happening in the global macro front, 2024, it is now officially on track to be the Gold and Silver Club's biggest and most profitable year in our 14-year history. Our clients have already made in excess of 6, 7, and 8-figure returns so far this year, and we're only in May. To put that another way, the majority of our clients at the Gold and Silver Club, they've already made more money in the first 5 months of this year than they made in the entire 12 months of last year. Extraordinary times, they do create extraordinary opportunities, and right now, as traders, we're living in some of the most exciting and rewarding times ever. It's times like these that make millionaires and billionaires out of regular people. Whatever long-term goal you're looking to achieve through trading, whether that's to create a full-time income, a secondary replacement income, or just to earn a better return on your savings, now is the time to take action. Right now, you have an opportunity to make 2024 your biggest and best yet, which based on our research, it's going to be another blockbuster year due to all the current macroeconomic events that are currently unfolding. Here at the Gold and Silver Club, we're consistently banking over 10,000 points profit per month, which we've been transparently documenting through our weekly videos. If you're trading at one lot, that's $100,000, or if you're trading at 10 lots, that's $1 million. As you can see from our testimonials, the majority of our clients at the Gold and Silver Club are utilizing our proprietary research-driven trading approach. They've already made in excess of 6, 7, and 8-figure returns, and we're only in May. If you've been kicking yourself for missing out on some of the biggest trading opportunities so far this year, and you want to make 2024 your best yet, then go to jointhegoldensilverclub.com now. The link is also below this report in the description to learn how our mentorship program can take your trading to the next level. Investing in yourself, it is the best investment you will ever make. Make investing in yourself a priority because nobody else can do that for you. So with that, let's go over to the charts. We'll talk you through exactly what we're looking at here as we head into the next week. So the game plan is all worked out. Oil did eventually last week drop back down towards the price swing lows. So we talked you through that if oil was to break back down towards those levels, this would be a perfect accumulation zone. So far, over the last week, we've been able to add 3 new trades here on oil. All of them, in fact, right now, they are in profit. So we managed to get our lowest entry on at $77.01 per barrel. Above that at $77.45 and again at $78.35. Now, what has been interesting, the dynamic here on oil, is that in the last week, we have finally seen all those late speculators who use their trend trading systems to buy much later into the move, who got sidelined throughout most of 2024 when they couldn't handle it anymore, when they eventually bought the top, they've now essentially been rugged. So now that we've seen them get liquidated, this provided the perfect opportunity to buy back in at the price swing lows on the sell-off that we've seen in the last week to further stack more positions. So we've now got a total of 6 positions on oil. 3 of those new trades that have been executed in the last week, and right now all of those trades are currently in profit. What is the game plan here with oil? Very simple. If we continue to break out, we'll ride this move and scale out of profit as we start breaking out to prior highs. However, if we were to roll over, back down towards the swing lows again, yes, I would look to add further exposure and continue to stack this position, which leads me over to palladium. So we took the opportunity on the spike high last week when it did finally break above $1,000 per ounce. Do you remember what we talked you through previously? When the price of palladium was breaking back down towards $950, $940, $930, the expectation would be over May, we're going to get back above $1,000 per ounce. That's exactly what happened on Friday. We took that opportunity on 2 positions to bank over 1,000 points profit here on palladium last week. And now at the beginning of the week, we're starting to see a bit of a pullback here, but it happened. We broke above $1,000 per ounce. Don't get complacent. Take the profit when it is being provided. We got that nice breakout to the upside. All of our palladium trades, they're now protected. It's a win-win. If we were to break back down towards the swing lows again, I would look at opportunities for reloads. If we break out further, I'm going to scale out of more profit. Now, platinum was fantastic for us last week. So 4 trades, we actually banked 1,000 points per position on platinum. So you know platinum here. We've been talking you through it for so long. big opportunities over the course of March, April, into beginning of May as well on any break back down towards $900 per ounce. We're now above finally $1,000 per ounce. So again, we've been continuing to scale out a profit, banked over 4,000 points profit on platinum last week. One of the recent trades that we entered back in the middle of April here was at $917 per ounce. Very simply, if we break out this week to $1,017 per ounce, I'm also looking to lock in 1,000 points on that position. Now, bear in mind on Wednesday, we have CPI data. It's very common for commodities spiking to the lead up to that, but then often you'll see profit taking either on that day or later on in the week, which then leads me over to gold. Gold is still a chop fest. As I mentioned to you before, too many speculators bought later on into the move. They get very excited every time that gold starts to make a run back towards $2,400 per ounce. Then it just dumps. This is the hardest market for a lot of investors and traders for gold here, where they got sidelined and they're just trying to get an opportunity to get in at a good price here. So every time they think they've got a good price, market starts to pump, they start adding to the position, then it just essentially dumps again. I'm expecting more range-bound price action in May for gold. Same situation here with silver. So we continue to see it consolidate. It's still under $29 per ounce. A lot of these breakouts we don't quite clear above the price swing highs. They can end up being fake outs here. So just be aware of that. Now we still maintain our positions on silver from under $23 per ounce, where we got 3 trades on. It's the same on gold. We've still got positions here from under $2,000 per ounce. I've kept a little bit of exposure running. However, at the moment, still for a lot of traders, they're just getting caught in the constant ricocheting back towards support, resistance. And this is enough to start really flushing out a lot of traders. You'll see the same thing happen back here in December, where we had the break to all-time record highs. After that, a lot of traders who got sidelined, they bought in too late. Then they just go through about 6 weeks worth of consolidation until it finally pops lower, flushes out all of the recent longs, and then it makes its move. So essentially, I would expect something similar on gold here to start flushing out late longs in the market, traders who got sidelined. We may get a bit of a spike into CPI data, but then dump afterwards, and then continue this sideways churn until those late speculators have been flushed out, and then gold can then send back to new all-time record highs. And of course, whatever long-term goal you're looking to achieve through trading, whether that's to create a full-time income, a second or replacement income, or just to earn a better return on your savings, now is the time to take action. If you want to maximize your money-making potential and thrive, not just survive in these fast-moving markets, you need to adapt your strategy to the current market conditions. Most importantly, utilize a professional, research-driven trading approach. One of the biggest obstacles that holds back 99% of retail traders from achieving their desired success, it's not having access to the correct professional strategies, institutional level data, and market intelligence to make confident decisions. There's a huge gap between the top 1% of professional traders and the bottom 99% of misguided retail traders who use outdated technical analysis and gimmicky technical indicators that give you absolutely zero edge. If you want to get yourself out of the bottom 99% and into the top 1% who are actually nailing it and making 6, 7, and 8-figure returns in these markets right now, then you need to utilize a professional, research-driven approach, or you'll just end up wasting lots of time, money, and effort, and you'll have no results to show for all of your hard work. In these rapidly changing markets, you need to be constantly innovating and evolving. Technical analysis, outdated technical indicators, they won't work. Those days, they're long gone. If that's all you're relying on, the odds are already stacked up massively against you. If you want to change your results, you have to change your thinking. If you want to learn our exclusive research-driven trading approach that is never taught to retail traders, only reserved for professional traders in the banks and hedge funds with access to powerful game-changing insights, including where the banks and hedge funds where they're buying and selling in real time, alongside the key liquidity zones so you can enter and exit the markets with precision, alongside the fundamentals, the macroeconomics, the capital flows, the daily, weekly, monthly, and quarterly real-time data-driven cycles and intermarket correlations, then you need to join our mentorship program. Right now, we are in one of the greatest eras of wealth creation the world has seen. If you want to successfully capitalize on these huge money-making opportunities and build significant life-changing wealth, there's no better time than now. If you want to upgrade your income, you have to upgrade your skills. Never underestimate what you can achieve in the next 3, 6, or even 12 months from now with the right guidance and mentorship. Time is the most valuable commodity that we have. Make sure that you don't waste it. If you want to join our community of successful traders and take your trading to the next level, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to real-time trade ideas access to institutional research and market intelligence, access to our private Members Academy website, and also support and one-to-one mentoring. For more information, go to jointhelivetradingroom.com. The link is also below this report in the description. So just click on the link, make an application, and we will get in touch ASAP.